let's look at NQ. Let's go over some NQ price action. All right, delete this whole thing. So a lot of people may be confused on where they want this to go, and I don't blame you. It's kind of hard to dissect these price action in live time as far as anticipating where it will go. That's why, we usually react. Every morning we show up to the charts when we have a forecast. We tend to go off of that information that's being used, that's being printed. So that gives us a better idea on how to really navigate the markets rather than just saying, okay, I want to see this low by the end of the week, when in any case that can't happen. Because if we look at it from last week's or the week before's perspective, we wanted to see price above this high, but we didn't get that. So we all know that we had a LB here. We all know that this is a liquidity block here, but we've been building liquidity above that area. Well, we've been building liquidity below this area. Why have we been doing that? Because we've been inducing buyers off the back of this area. We've already induced buyers. If we're looking at it from a higher time frame perspective, we've already induced buyers. So what we get here is we respect the LB from the left, trade up into these inducement highs, sold off, respecting the low, and after we respect the low, buyers get induced. We have a BOS. We didn't take the liquidity from the left though, as far as the inducement from the left, but we did induce buyers by breaking structure, taking out this area here that sellers were selling from. So we take out that area, we create a liquidity block, we sell to the downside, taking out this low. That low induces sellers. Therefore, we could see a potential move back up to the upside. We get that in the form of price running for the inducement high. Price runs for the inducement high. We have a liquidity block above. It's it's a difficult situation to navigate. I'm not gonna lie to you, as far as trying to pinpoint direction in the sense where you can say, but we didn't trade above this high. How can price, since we didn't trade above this high, how can price respect this area? So therefore, we're in a bearish market environment in the sense of what we just explained from the left. So the fact that we're getting this price action here, all of this is just to build liquidity at this low. Therefore, price can leave this high, price can leave this high intact for whenever it takes out this low. Now there's liquidity to target to the upside. So inducement low gets taken, that liquidity block gets tagged, and then we see 2 days of an impulsive sell-off. So let's open that up. And that's just how you can really frame out the daily chart. I mean, everything is really it's really simple in a way that you can apply all the concepts to every time frame. It's not, oh, you're supposed to do this on a specific time frame or anything, because I still see a lot of people asking, how do they frame out a higher time frame bias when it's really the same approach that you would take to analyzing the lower time frames. Everything goes into conjunction with each other, so there's no there's no real reason that there should be any confusion on what you should do on the higher time frames. So notice how when we trade into this low that we've been building liquidity at, we respect the low. So you want to ask yourself, why are we buying right here? Why is price moving to the upside after reacting off of liquidity? So these are things you want to ask yourself when you're in the situation in a live market environment. So if you're looking at a scenario from this angle and you're saying, okay, we react off of this area and then we just induced buyers. Why did we do that? Now we have liquidity to the downside. We just engineered liquidity to the downside by inducing buyers here. So since buyers just got induced into the market, they're going to want to buy again at these lows. Remember, the easiest way if you want to see a buildup or if you want to see a trap occurring, you can look at it from the smart money concepts lens. That's why the smart money concepts was added into the material and the course material because it gives us a framework to easily look at this in a simple fashion. So we know this was a trap. Sellers are trapped here. We know this is a trap because buyers are trying to buy this. So buyers are now trapped. These reactions are so important, guys. I try to draw them out in every webinar just so it can train your eyes to see it a little bit more often because I feel like that's what helped me the most to identify where are we engineering liquidity in. So once we try buyers, we have this LB here. It's an LB just because we take in liquidity, but we can't disregard the fact that we still have these areas to the left. So if we're looking at it from a liquidity standpoint, price has respected this area, induced buyers off of that, which caused that move up. So therefore, we still have all this resting liquidity below this low. So just because we taken out those buyers, that doesn't mean we want to buy. That does not mean we want to look for potential long entries. Just because we have to still factor in that it is high risk. Yes, you can potentially catch a scalp or intraday play as far as a short-term trade, but all in all, if we're looking at it from a higher probability standpoint, those one it wouldn't be a trade that you could potentially hold, is what I'm trying to depict in your mind. So same thing from the left, right? I mean, same thing from the right, right? We got that reaction that induced buyers. This reaction, right? It induced buyers too by taking out this high. So notice how the market respects these areas to engineer liquidity. And it has to. It has to do that because if there's no sufficient liquidity in the market will engineer it by respecting these areas. So BOS to the downside, we see price respect this area. So notice how you could just grab the area candle that it's reacting off of. Sellers want to sell this price action because, we had that BOS to the downside. So normally SMC traders are looking to sell with structure. That's why we preach not to. So we have this low here, spikes this low, spikes this low after inducing higher, trap down. So now we react off of this area, price takes internal. You could have a potential entry here. Honestly, the timing is so off. This is London. I don't know who's trading indices during London. I never did, so I wouldn't recommend it. Wait, yeah, this is London. Okay. So we trap this inducement high. I mean this inducement low, I'm sorry. Notice what we do too. And I'm on a higher time frame. I can easily spot these moves as far as where price induces higher after reacting off of these levels. So if we were just training our eyes here, we react off of that and then we induce higher, create that create that build up there. As soon as that happens, we have a build up there. So build up taken. Now we can see price reverse because we just engineered liquidity here. So same shit that we just did on from a sales perspective, we just did on the buy perspective. Yes, it's always recording. Don't worry, I got y'all. So inducement high gets taken. Why was this an inducement high? It was the, area from here to here is where price induced sellers from. Now, we're not going to negate the fact that we still have this high that price could react off of. Just because you can see it as the LB because we took out this high doesn't mean we want to be selling from there. Remember, we just had a whole bearish move to the downside, one, inducing sellers. Therefore, we could still see price return to the structural high and be used as some form of reaction point. But it doesn't get used as the reaction point. 95 or 95% of the time it will. Sometimes it could get just blown through, just like this. But, you know, the market is uncertain, and we have to remember that we can't try to anticipate things or expect things in an uncertain market. So sellers get trapped by taking out the inducement high. So sellers get trapped. Boom. Therefore, we know we have some sort of inducement low. Where do we have our inducement low? Actually, let's go to the lower time. We're getting too ahead of ourselves with this price action. There's a lot of decent moves in here. So after we trap sellers, we create this. I can't lie, this price action looked ugly first sense. I wasn't able to trade around this time, but here's what we get. If we're just spotting liquidity, price taking out liquidity, take out a high, create a liquidity block, we take out this low, boom. But notice how before we take out that low, we respected this area. So train your eyes here real quick. We respect it. It does this, all right? We take that low, but we're still trading in the low to the left, and we induce higher again after inducing once here. So induce trap, still respecting liquidity from the left, induce again. So now those buyers get trapped. Look how it does that again as well. Induce higher again, trap, trades into this area, trades into this LB, sells off, builds liquidity at this area, BOS, respects it. So now we have liquidity right here. This is like clear as day that there's liquidity there. Nobody can argue and say there's no liquidity there. So you can see liquidity or a buildup there in the form of a channel and POI is being respected. We can all agree for that. So price comes and runs for this, the liquidity from the left. Why is it this area as the liquidity from the left? So this area was the last point of price before it took out this low. So that's where sellers were originally getting induced from. So that's the origin point. And then conveniently, it is the last high before the liquidity block. Therefore, build up, liquidity block, potential entry. High risk entry, in my opinion, because we haven't tapped into anything. Well, actually, that's such a lie. We did. Sorry about that. We tapped into here. This was the reason why we induced buyers. So since we reacted off of here, nobody can tell me why we're inducing buyers just because of it's unreasonable, it's invalid. There's no reason for price to just react off of this area and start buying. So since we do that, like how we explained to the price action from the left side earlier, we're doing that to generate liquidity. So since we know that we're doing that to generate liquidity, we target that. So this whole area, because also from this low to that high is where we induce buyers from. So we want to see price below that low. Knowing that, we drag that all the way out, drag that all the way out. So we know we have a target in mind, and we just engineer liquidity there by inducing buyers by taking out this inducing high. Buyers induced. So now, once they got induced, we know we have a target in mind. So, kind of a little difficult to spot something here. Let's see, what is this? This is 6, 7 o'clock. So we create that buildup, and timing is very important with indices. We have to remember that pre-open, there's a chance that price builds liquidity for it to be taken when stock open hits. So what we do is this: we take out this low. Once we take out that low, that induces sellers. I'm sorry. Remember, we just induced buyers off of the reaction of that candle, that low to the left, right? So since we just induced buyers off of that reaction, we still have liquidity below that low. But we trap these early buyers here. We can still see price move up in a sense to take internal liquidity. Price runs for the inducement high and the structural high. Boom. So all that liquidity is taken. Why is all the liquidity taken? Because price is reacting off of this area. It reacts off of this area, this LB sold off. Now price runs for it. Price runs for that high, trapping sellers again. Trapping sellers again. So we're still staying below, I mean, we're still staying above this area. So sells are still valid since we just trap sellers. So we want to see a scenario where we can get involved in a higher probability sell, without potentially taking a direct entry because we have a lot of things at play. We have a buildup because we just induced buyers off of reacting off of this low. So we have a buildup or engineering liquidity, whatever you want to call it, whenever you want to call it, I'm sorry. And we have a narrative of wanting to go bearish because that's our inducement low as well. So what we have here, we trap sellers. So once we trap sellers, was there an entry there? Because there's a lot of times where you can frame out an entry. Perfect, there is. All right. So these are like my favorite type of entries to take. Notice how I could see it like on any time frame that it presents itself on, right? I don't have to go to the 1 minute. I can if I want to, but it's very easy to spot. We have our liquidity block here. Take out the high. So in every webinar, I stress this because in my eyes and in my data, I've been seeing I've been seeing that this plays out way more often if it respects the low than it takes it first. So since we respect the low first, that gives me the conviction in wanting to see the high get taken first. So since we take the high first, I'm taking the sell every time. I'm taking the sell every time. My data shows it that this is higher probable if we take this high first before we take the low, because I've seen a lot of times where we take the low and then we come to the high and then it's a loss, or sometimes it works out. But my data shows that respecting the low first, then taking the high, is higher probable. So that's my entry. That's mine. So remember, we're still targeting that engineered liquidity to the downside. We're still targeting that. We're going to partial along the way, but we have our higher time frame target in mind. So if we want to look at it from a 1 minute perspective, so you can see it clearly, because I know what it looks like on a 1 minute. So we have that inducement low, right? So this area from this low to this high is what trapped those sellers right there. So we don't want to see price below this low if we want to take the sell, if we want to take a confirmation entry, right? So since this is a form of a confirmation entry, I don't want to see sellers get induced. So since I don't want to see sellers get induced, I need price to respect this area, and I need it to take some sort of internal. So I don't have to be too intricate here because I have a liquidity block here. So as soon as I see that internal taken, and look at how we have this sort of reaction here, respecting that. Like it doesn't really induce lower, but it just shows me we have sellers trying to sell this early by respecting that. So I grab that high after, because also if you look at the 3 minute, Sorry to keep going back and forth. To make it a little clearer for you though, you see that's the first candle that respects this area. So I just want to see price above the high. Simple stuff. So it's above that high. Take the confirmation entry there. That's one entry. So we also sell off. But look at this. We're still respecting that area to the left. So we're building a shit ton of liquidity here at these lows. There's no way that you should be buying in this market right now. So what happens is, let's go to the 1 minute because I saw this after the fact, unfortunately, because I was busy on Thursday. I had to do some stuff with my attorney. So I couldn't get involved with this. So yes, we have a BOS. We taking out we taking out these buyers. But we have to understand buyers on the higher time frame have not been trapped yet. Why? Because they're still buying off of this low to the left. They're still buying off of that low to the left. Every time have a reaction, look, we're inducing higher. Here's one instance. One, here's another instance. Like we should not be looking to buy this market. So let's look at what price gives. Already, price induces buyers after taking out this area here. And then notice how we come back and respect it. Good, cool. Now, some of you may argue, hey, Elijah took this internal. Does that mean anything? Yes, because it just induced sellers, but we're still respecting this area. So I'm not going to say that this is a area that I want to be trading from, but I also don't want to be trading from this area as well. I do not want to be taking a sell from this area because we just took that on the turning point, respected this area. But since I have a bearish point of view, I need to see liquidity built still. I can't just take a sell. Sorry, I can't just take a sell if I see this taken. I need to see this taken, and I need to see if we have some sort of liquidity block. I need to see, you know, all those things that in play. But how do you So don't view it in terms of pattern, but liquidity. Yes, remember, guys, we stress this a lot. We don't want to view this as in the form of a pattern because there's going to be scenarios where you're going to say, oh, it looks the same as this price action, but it's really not. You have to apply the logic of what's going on. Remember how I'm telling you that price is respecting liquidity from the left. It's respecting that area from the left and it's inducing buyers. So since we're applying logic to there, we know there's no reason for us to be buying. We just need to see price build more liquidity and sorry, we need to see price build more liquidity and trap and have that trap move after to see if we can get involved in some sort of selling. So we respect this area. Look at how we have this build up price action. Like just this price action alone, you want to stay away from. So we respect that area and then we induce higher. We take out this high and we also take out whatever price reacted off from the left. So that candle induced sellers to sell off here. We have that build up. And look at what we have here. Our entry from before, that's a valid liquidity block, by the way. Our entry from before is a valid liquidity block. So as soon as this high gets taken, sellers get trapped. Sellers get trapped. You can take an aggressive direct entry here. It's more of a higher risk play, in my opinion. More of a higher risk play just because it's a direct entry. But all in all, it's following the direction. We have a lot of things at play. We have engineered liquidity in the market. We just look at this build. This is such a clean buildup right here. So it would have still been a valid entry in my opinion. So take it to that low that we're targeting. Oh, 3 to 9. So price comes, takes out that low. All entries hit target. So that's NQ where you could have caught 3 potential sell opportunities On Thursday, this entry was probably hard to take just because this was in London time, but it still followed the model. I mean, pitch perfect. These would possibly be the two entries that I would take, but I would mostly key in on focusing on taking these type of entries, these type of confirmation entries. My favorite type of entries, honestly. So we take out all that liquidity, that price we're building up at. So buyers are trapped. Let's kind of clear this up because this is kind of crazy everywhere. So we take out that low, but notice how price is still respecting this area that induced buyers from, like from a structural standpoint. From a structural standpoint, we know that we induce buyers from there to there. But we have our reactions here. So yes, we've taken that low. So now, since we've taken that low that caused the buildup, since we know that it caused the buildup, we could potentially see price move in the other direction. I hope you're seeing I don't want to say pattern because I don't want you guys to start like viewing things as a pattern, but the term I'd use in this aspect is pattern recognition, right? So you see how every time these lows or these highs that cause this certain buildup, when they get taken, you see that reversal. Not reversal in the sense that it should take out all of these highs, but a reversal in the sense that you see the price run for the next point of liquidity, and it does the inducement high. Runs for the inducement high, you have what above? LB. And you still have liquidity to target to the downside. Why do you have liquidity to target to the downside? Because we reacted off of this price action to induce buyers. So if you look at it from this standpoint, why did we just induce buyers? Respecting this area. So you take out inducement high, you have an LB to the left, target that. And I believe Adam took this trade on Friday. Very clean, aggressive entry. Very clean, aggressive entry. So NQ provided a lot of sell opportunities. I'll say that. Definitely clean. What time is this? This is 1 a.m. London. That's crazy. You're getting moves from NQ in London. That's insane. But how do you know that the spike of the high is enough? I see many times that the to be taken for back testing. You see, like, okay, so that's a question that a lot of people have in the beginning phases of their learning process in this strategy. It's always going to be, how do you know that that's the high that price will reverse from? How do you know? How do you I'm going to be real with you. You don't know all the time. You won't know all the time. But that's why we piece logic together. So I look at these areas where price are respecting and building liquidity from. So notice how I have a framework of where I'm going off of that I say, okay, we're reacting off of this area. But remember, we should take in this one. So I know that we could potentially induce again because we've just taken out an area where price was respecting and building liquidity from. So since I know that got taken, I know that we could potentially have some sort of reverse reaction. And we do. We take out this point of liquidity now. Now we just aim for the next point of liquidity. You're saying when price runs out inducement that causes a buildup, then we can see a reversal. Yes. If you look on your chart and you look on any market, if you see if you see an inducement high or low that's been building liquidity and it gets taken out, 51% of the time, you will see some sort of reversal. I'm not going to say a reversal in a crazy way where market just changes direction, but I'm going to say you'll likely see a reversal, and that's why we try to partial at these points. Yes, I will break down gold. If the market would take out an internal low, 1120, would it be possible for a run sell again? 1120. What day, Dan? Sorry, what day? 1120. What day? I know ES moves similar like NQ, but can you break down Thursday's price action? Yeah, we'll see. Let me see ES after I get over gold. Bro, how is it LB while there's still some highs at the left? Are you talking about this? It's still a high here. Okay, so look at what we just did. We induced sellers first before we took out the high. That creates your liquidity block. This was already a liquidity block, but it was used in an aspect of this. But then we just take out that area because now that becomes liquidity since price induced sellers here. And remember, we have a framework. It's not it's not that, oh, we just see a spike above a high, that's a liquidity block. No, we have a framework. We just built a whole bias. Why did we want to see price below this low? We just built a whole bias. So in any event, you could say this, right? That's a liquidity block right there, but there's still a low to the left, yeah. But that liquidity block fulfilled its move. Why did it fulfill its move? It trapped buyers. It fulfilled its move. Price respected that liquidity block and it moved higher. To answer your question, we've induced lower, induced higher, created that liquidity block, and we also formed a form of liquidity before it. So look at it from another scale. What's a better view? So we build liquidity here. There's no liquidity to target yet until this area gets induced from. So until this area gets induced, we induce higher, we form liquidity below here. So now that gives us reasoning to take the sell. That liquidity block, the high from the left, the liquidity block respected the high from the left. That supply zone. Is that about LB? Because I get confused so many times. So I'm thinking that it's liquidity above. Um, I want to make it to where like you're not overthinking it, right? So in a way that I just analyze this price action, sorry, in a way that I just analyze this price action. Let's clear it. Let's clear it actually. So LB, we also know that hey, in this scenario, guys, we're bearish. We wanted to see price to this low. How can we get there? We know we have to build liquidity on the way down, but how can we get there? We take out this internal. Look what we had below. We had a buildup, and we had engineered liquidity to target because it reacted off of that area and induced higher. So those are three reasons why we can see the liquidity block respected. Price just takes out this internal point because the induced sellers were still reacting off of the lows to the left, induced higher. Price respects the liquidity block here. So that's why I would say, hey, the aggressive entry here, I wouldn't take it. I would not take it because how do you know that this will hold? You don't know. You don't know that this will hold. That's why you don't take the aggressive entry here. In my opinion, I won't take that aggressive entry. But what I do is take the confirmation. Remember, like how went over earlier, how it gets taken before the low. You have a liquidity block here. You take that confirmation. That's why in those scenarios, whenever you see, okay, it's respecting a liquidity block, but the internal just got taken that respected that LB, you don't take the aggressive entry once this gets taken. You look for some sort of confirmation because, in a sense, price could have taken this high out and then sold off. But that's why we react for what price has given us. I'm not going to just anticipate price is going to respect that liquidity block still and take the aggressive entry. What if you take a loss? You could have avoided that by just waiting and taking the confirmation. So that's one. You take this area, last point before sellers were induced. Why is that the last point? This is the last high before sellers got induced. Inducing that low and that low. Trap, LB, sell. This scenario, this now becomes the inducement high. Why doesn't it become the inducement high now? Last high before the sell off. Boom. From that high to that high, I mean, from that high to that low is where we induce sellers from, taking out that area that we were building liquidity from. So we could potentially see that area taken because we still need to build liquidity below here. So respect that area. Now we can see price. We want to see price engineer liquidity here. We want to see that happen. So we want to see price get induced higher, or we want to see buyers get induced. I want to say that to make it simpler. So inducement high gets taken. You still have that LB, still have that LB, but you can use the whole area. I mean, it's a niche scenario. Like in this sense, the entry, the aggressive entry is kind of harder to take because I do understand. Like we use this LB, we use this LB for this. So I can understand your point of view, how this aggressive entry can be hard to take, and I agree, it is. That's why I preach, look for the confirmation. Yeah, even that, it's out of session. It's out of session. Like even that, I mean, we take out the high, induce lower, trap. Oh, we don't even trap. So I mean, there's no entry for me as far as a confirmation. So yeah, that's why we deem. That's why it's a thing of dissecting your entries and saying, okay, which one is high risk and which one is low risk. That's why we have to dissect that. Would you take that last move down after taking out the last high that broke below? Are you talking about this one, Mike? Talking about that entry? Me personally, I wouldn't take it. Oh, to the left. Uh, this move, this move. Yeah, all day, all day, all day. Because we still had to build up to target right there, all day. This move's kind of iffy. I don't know if I would take it, but it was clean. I mean, clean after the fact, of course. Um, S17, I explained it earlier in the webinar, so trust me. When the recording drops, just take a look at that. I just don't want to keep going backwards because I still have to go over gold. So let's actually move on, guys. I've been rambling on you forever. Gold. I missed two confirmation entries on gold Friday, so I'm kind of upset about that, but it is what it is. So if you want to frame out direction, let's do that. Easy, easy stuff. All right, so we know we're reacting off of this area here, that inducement high. We react off of that area, and then we induce sellers. So now we know where we have engineered liquidity at. Now we know we have a bias. Induce sellers. Okay, we want to see price to the upside. How can we get there? Price takes out this daily high. We trade above that daily high. What caused price to trade above that daily high? This is how you can build a bias from a daily standpoint. Or, I'm sorry, this is the 4 hour. From a higher time frame standpoint, it didn't even need to go lower sometimes. So we take out that daily high. We induce buyers. What caused that? This low. And notice how this low, we trade back into this area, right? Notice how above this area, we're inducing higher. So we trade higher, up. Look at how it takes out that low, and then buyers get induced again. So forms some sort of LB, right? Forms some sort of LB. Price takes out the low. Cool. And then price induces higher, takes out the inducement high. So price ends up respecting this, this LB or whatever the case may be. But this is how you can look at the market from a counter trend point of view, right? Since we induced higher and we left an inducement low, right? We want to see that inducement low get taken. Since we want to see that inducement low get taken, we need to see some sort of build up happen. So since we build up, all this is clearly showing you that we have some sort of build up. We react off of this area after taking a low, induce higher again, taking out the inducement high. Respect that LB. So let's go lower. Clean this up a little bit. Clean this up a little bit. Refine this because I just like refining this. It looks clean. We can all agree this induced higher, this induced buyers, and it respected this. Right? We can all agree about that. We just drag that area out. Right? Price, price induced sellers reacted off of this area that price is buying from to induce higher again. Would I take this sell? No, I wouldn't. Just because one, everything is telling me that I have a bullish bias. Why would I waste money on taking a higher time frame? Not a higher time frame, I'm sorry, a counter trend trade that probably, you could potentially take a loss from. You see, like the RR, maybe it may look enticing, guys, but at the end of the day, this trade could probably play out 30% of the time or 28% of the time. You don't know. You don't know. And we also have liquidity from the left. Look at that. Why is that liquidity from the left? BOS. I mean, we've taken out the inducement high, so yeah, we could potentially see a reversal. But all it is doing is since we've taken out the high, pay attention because I've seen this happen a lot, and this is what helped me. Like this is what helped me grow. So notice how we take out this inducement high, all right? Since we noticed that we've taken out this inducement high, the liquidity has been taken. We need to now build more liquidity because the liquidity has been taken. So you see how we get that reversal after we just taken out the inducement high. Remember, I emphasized that earlier. We get that reversal, we trade lower, and we respect these lows, inducing higher. Cool. We don't want to be selling from this area. Yes, it's a liquidity block, but we don't want to be selling from that area. Why do we not want to be selling? You don't know if it's going to hold. You don't know. The whole premise is we anticipate price to engineer liquidity here by respecting that area and going lower. So once we do this, right? Once we take out the low, oh, sorry. Once we take out the low, we took out this low. Okay, we have liquidity above here now. But remember, we still have this inducement low from early buyers. So we're not going to be buying this price action. Remember, you're still buying with retail if you're trying to take this buy just because this low got taken. We don't buy that. Remember, we do not buy that. Okay, cool. We get more liquidity built. More liquidity got built, induced higher. Where's the next point of liquidity? At the lows, guys. At the lows. We're bullish. We do not want to see we do not want to see price respect this and take a trade and go higher now. So we just drag this out. Just drag this out. Liquidity on both sides of this market right now, by the way. So you want to stay away if we're in this sort of range. Once we're in a range like this, you got liquidity points on both sides, engineer liquidity, stay away. There's no trading. Take the low. The low gets taken. This one low gets taken. Cool. We're starting to stab below a little bit more. A little bit more. Here's what happens. So we respect this area. Cool. Notice how there was a potential entry. There was a potential entry here. Boom. Induce higher. Trap. That's a confirmation entry that I would take. Why? We have this LB here. Notice how that LB does this, right? We do the same shit. We respect this, right? But we respect it, and then we take out an internal point, which causes us to induce sellers forming our liquidity block. So we formed our LB, go higher. What made this go higher? That candle right there. Cool. That candle got swept. And then we just build up, induce higher again. We still stay below this low. I mean, we still stay below this high. Cool. Perfect. We stay below that high. I'm taking my entry there. Taking one entry there. Cool. And you can leave breathing room for your stop. I know I have liquidity All above here, I'm targeting that. So if I know I'm targeting that, I'm partialing here because this is an inducement high. Why is that an inducement high? High, low is where we induce sellers from. We can see potential reactions back into this high. Once we take out the inducement high, guys, notice how we see that reversal. Happens every time. We just got this low. Chances are I possibly would have been taking out break even on this trade. So this would be taking out break even. Let's put that in a realistic market environment. Break even. So we induce lower, induce lower. So we induce. Cool. So now what we have, we don't want to take the aggressive entry because I just use that LB for this entry. So remember, like I said in NQ, I'm not taking the aggressive off of this. Again, once this, sorry, I'm not taking the aggressive entry off of this just because I just used that LB for this. So no, I want to wait for the confirmation. Do you put more weight on LB that induced buyers first? High taken and low taken versus respect. Um, that's a good question, Mike. I treat them all the same, but it's easier to spot the ones that take the high first and take the low. So it's very easier to spot LB like this, right? That does this. It's very much easier to spot a LB like that that does that than one that you would say does this. This is a terrible drawing, actually. I mean, I like it like this better, honestly, because look at how we have. Sorry. Oh my God. Oh my God. Technical difficulties. Okay, so look at how we have this, right? And then there's liquidity there. I mean, we have a liquidity block. The build up first, yes. I like to see the build up first, but I mean, to each their own. I don't treat them any differently. I really don't. Sometimes one is easier to spot than the other. I would say that though, to answer your question. So look at how we have this confirmation entry. Easy to spot. Same shit. We respect this high. We stay above the high. Great. Last internal point. Take it off the last internal point. LB's right here. LB is right there. You can take it here or here. It doesn't matter. So you take the entry there. Still targeting those highs. If I'm on an FX standpoint, I'm targeting these highs. If I'm on a future standpoint, I'm targeting this. Okay. So now you may say, okay, there's no engineer liquidity here yet. Yeah, you're right. So this entry is kind of, I wouldn't say high risk, but it's more easily, it's easy for price to come back to this point to react off of some sort of price action here. And it does that. So notice how it takes out this internal point. Cool. We like to see that. We want to see that. So we want to see price take out that internal point because it just gave us an indication that it induced sellers off of some sort of reaction here. Cool. That means we're building liquidity above here now. I mean, we built liquidity above here now. Not building, we built. So we can look for a potential confirmation entry now. Because why? Same thing. Sellers got induced. Cool. We have this sort of buildup of price action. Look at how we just induced higher. And look at this. We respected this area. Respect this area. You may see LB, but look at this. Yeah, LB, but one, we induce sellers, and we have a buy target. There's no reason that we would want to see this LB traded from. We want to see this LB cause price to induce sellers. And that's what it does. Respect that. Inducement low taken. We have an engineered liquidity here now. Cool. Now we have targets in mind. Right below the low. I would take it to these targets. But all in all, partial 50% at this high. 50% is what I would do. And then just run it to the higher time frame target. This higher time frame target. That's gold. That is gold. I know somebody said they wanted me to look at ES. Give me 1 second. ES. Ooh, this price action ugly. Okay, taking out that low after we um straight build up there. Taking. Damn, this price action is terrible, bro. I mean, all you see is this as an inducement high to taking. Like, I don't know who's trading ES right now, but stay away from that shit. I keep that. All right, cool. Here's what we have. Here's another scenario where you guys would say, oh, liquidity block, but there's highs to the left, right? This is the inducement high here, right? We can all agree that this high to this high is the inducement high. But if we look on a daily perspective, we just taken out the daily inducement high. So, trying not to confuse you guys, I'm sorry. It could get a little bit tricky. But remember how I said last webinar, there's inducement highs and lows everywhere on the chart. Here's how I would frame it out. So, to make it easier for you guys, we can see a reversal after this inducement high is taken. So we can all agree from this candle's high, we raid down and trap buyers. I know we all can agree that. So we have our daily inducement high, and now it's also previous daily high. So since we know that we could potentially see some sort of reversal. Yes, we have this here. We have that. I understand that, but there's no reason for price to go over there yet. We didn't generate any liquidity at these points as far as trading back into this area and moving away. So we take out this internal high, which was previous daily high, also a liquidity block, so it could potentially be respected. It gets respected. I mean, I don't know how I would trade this price action, guys. It looks looking bad. Looking bad. I mean, okay, to refine this to look better, to look cleaner. Last point of internal LB. I mean, I'm not taking this aggressive entry, to be real with you. I'm not. We react off of this area after slow buildup, spike above. What I would do in this scenario, I don't even know what I would do. I would stay away from this price action. I'm not even. Yeah, no. I'm sorry, Chris. This is terrible. This is terrible. Yeah, this price action. Nope. We took one long scalp on taking Tuesday low on build up. Pretty short. Also. Damn. Okay. Yeah. The cleanest things were honestly gold and Q. I know Aussie gave an entry. Let's look what Oz is doing. Starting to get back in the CFD game because I can't lie, I miss holding trades. So we got these highs. overall. We can agree that there's engineered there. We can definitely agree. Taking that low. Look at how price just like we have this LB here, right? Look at how price just reacted crazily off of this imbalance. Now, I don't trade strictly off of imbalance. This is just something I noticed. Just something I noticed. But this whole area is liquidity block. Let's not disagree. This whole area is a liquidity block. On a daily, it's even clearer. Liquidity block. So here's another example, Chris. I mean, not Chris, Mike, right? You see how it's a buildup and then it gets taken? It's just easy to spot. Just easy to spot. I mean, this scenario here, induce trap, this probably gets taken though. Kind of niche scenario. Very niche. All right, so we taken the inducement. I don't know how to navigate this price action. I can't lie to you. But what I did see was this. I mean, potential high risk direct entry. We have a LB there. Remember, we swept that too. So this is the LB. But there was like no build up. But we did this. We induced and then we trapped. But I'm like, we induced and trapped and reacted off of this area. So I'm like, would I have taken this? I don't know. I probably wouldn't have. Kind of sketchy. Kind of sketchy. But for FX pairs, GU was the cleanest. I know there was a couple people that took this. This was the absolute cleanest. Nobody can tell me otherwise. Oh my God. LB. Oh my God. These are the entries you want to take. These are the entries I'd like to take too. Clean. Simple, clean on an FP as well. Yeah, it happened during news, so that's the reason why I didn't take it. So it is what it is. But I think that's it, guys. I mean, we've been on for a minute. Went over everything that I could possibly go over. So if you guys want, the recording will be uploaded shortly. Make sure you tune into that. Make sure you tune into that. If you have any more questions, just ask them in the question chat in the Discord. Kind of reframe the questions of asking, is this entry valid or not? Like, and you're sending one chart. Like you're not sending the whole higher time frame. Like we can't really tell you if something's valid if you're just sending us one chart. Like I don't know. Like I would need to see the whole narrative of the chart. That's why I end up sending my own analysis to try to answer the question. Wally, you have to be either a monthly subscriber or the lifetime package for the course to access the recordings. No problem, no problem, no problem. All right, guys, I will see you soon. Make sure you guys dive into the recording. All right.